Hey everyone, we are again back to IPO season, and this time IPOs are not just raining but flooding the market with 8 main board IPOs opening up in 2 days between 19th and 20th December. What a crazy period for Indian stock market. Among all the 8 IPOs, I found the IPO of DAM Capital quite interesting. Although I did not get time to go through all 8 IPOs, but in case you find an interesting IPO apart from DAM Capital and want me to discuss, let me know in the comments. Now, so far we have seen the IPO of many companies, but with DAM Capital, we'll witness the IPO of a company that helps other company in their IPOs. Basically, DAM Capital is a merchant banker. This IPO is open between 19th to 23rd December and company is raising 840 crore via the IPO, which is a complete OFS, that is offer for sale. The good thing is company is launching this IPO at reasonable valuation. I also had a look at company's 251 crore anchor investment book that received subscription from all top foreign and domestic institutional investors. It clearly suggests the strong brand value DAM Capital has built, and there is certainly a lot of growth potential for the company. Also, company is fetching a very strong grey market premium at the moment that suggests interest from retail investors as well. So over the next few minutes, I would help you understand the business model of DAM Capital, future growth drivers, financials, IPO details along with the valuation analysis. The last part of this video is very important, which is key risk. So before you invest your money in the IPO, make sure that you clearly understand the risk involved while investing in DAM Capital. Alright, let's get started. So DAM Capital is one of the leading merchant banker in India. Okay, let's first understand what is the role of a merchant banker in India. So merchant banker role can be broadly divided into two categories. First is investment banking that include helping companies in their IPO listing, which is by the way the hottest market in India today. Then they help companies in QIP, that is qualified institutional placement. QIP is the process where companies raises money by selling shares to FIs and DIs. Then investment banking also include helping companies in their OFS, that is offer for sale, preferential issues, right issue, buyback and so on. Another vertical within investment banking is mergers and acquisition, where merchant bankers help companies in financial matter related to mergers and acquisition. So investment banking, or in other words, equity capital market, is their first business segment. Apart from this, merchant bankers are also involved in institutional equities that include broking and research related services. I hope you got a fair idea of role of merchant bankers. Talking about DAM Capital, it commenced the operation in 1993 as SS Kantilal Ishwarlal Sharebroker and Investors Private Limited. In 2008, IDFC acquired this company. Later in 2019, IDFC Group divested its entire stake, which was acquired by Dharmesh Anil Mehta and other investors. Subsequently, in July 2020, the name was changed to DAM Capital. So DAM represents the initial letters of Dharmesh Anil Mehta. Today, DAM Capital is a leading merchant bank in India with a market share of around 12.1%. This slide gives a good breakup of company's transaction since acquisition in 2020 till October 24. It includes 27 IPOs in total, where you can see the year-on-year breakup of IPO count and amount raised. Likewise, you can see QIPs, OFS, right issue, buyback and so on. For more detail on each transaction, here's the list of companies for IPO transaction that include many good companies that have shown their confidence on DAM Capital. Then REITs, QIPs, OFS, preferential issue, right issue, buyback and open offers. Here is the list of mergers and acquisitions and PE transaction. Latest one was in February 24, where DAM Capital was advisor to Nirma on acquisition of 75% stake of Glenmark Life Sciences by Nirma Group. If you look at business breakup in FY24, company did a total income of 182 crore. Out of this, 67.2% is from investment banking and remaining 28.3% is from broking business, and some portion is from other segment. If you look at company's financial journey, its revenues have doubled in last 2 years. Margins fell down from 35% to 22%, but in FY24 it has jumped to 56%. As a result, company's net profits have zoomed from 22 crore to 71 crore. If you look at company's profitability, its current ROE is 55%, ROC is 72%, and company is completely debt-free. Clearly the numbers are exceptional, isn't it? But there's a catch. This growth in last 2-3 years for DAM Capital is because of a massive upcycle in the Indian capital market since COVID. And not only DAM Capital, you take any company from capital market and they've grown at a very good rate because of the massive upcycle in the Indian capital market in last 3-4 years. But this kind of growth, where company has tripled its profit in 2 years, is certainly not sustainable. In fact, DAM Capital is extremely cyclical, where fall in capital market activity can result in sharp fall in operating margin as they have fixed cost. It's clearly visible from the volatility in the margin. and that can badly impact the earning growth in case of market slowdown. Considering the growth in FY24, it could not have been a better timing for DAM Capital to list its IPO. But market cyclicity is a huge risk for the company and hence it won't command a very high premium. We'll discuss more about key risk and valuation in the later part of this video. If you look at cash from operation, it is negative, but that does not show the right picture because DAM Capital deals in equity and derivative instrument in secondary market operation and execute trades on behalf of its client. Also, it acts as a broker for both buy and sell side. So cash from operation is not a right metric for merchant banking business. Otherwise, company is generating a lot of cash. If you look at company's leadership, Mr. Dharmesh Anil Mehta is the promoter, MD and CEO of the company. He has 25 years of experience in capital market. He was the MD of equities in Enam Security since 2007. And post-acquisition of Enam Security by Axis Bank in year 2015, he undertook role as MD and CEO of Axis Capital. After exiting Axis Capital in December 2018, Dharmesh Anil Mehta along with other investors acquired IDFC Security Limited and renamed it to DAM Capital. Overall, company has an experienced promoter and leadership team. Now let us look at the future growth drivers for the company. Okay, before we discuss further, if you find my analysis useful and looking for guidance as long-term investor, you can also explore my weekly video series that include one exclusive video every week where I share my own investment strategies along with tracking key government initiative and stocks to benefit from it. Since a lot of people do not get enough time to research and track the market, I try to add value by spending nearly 8-10 hours a day in research. I also closely track more than 200 quarter results in an Excel along with commentary. For more details, you can explore my website or join button of this YouTube channel. Now, as far as future growth is concerned for DAM Capital, we have to look at it in two ways. First way is short to mid-term and second is long-term. In the short to mid-term, capital market sector is extremely volatile and it's very important to understand this. When there's a strong rally in the market, then only we'll see many companies launching the IPOs, QIPs and so on, where they get excellent valuation for exit. So more and more IPOs also benefit companies like DAM Capital. But when the stock market witness bear market or slowdown or consolidation, those IPOs and QIPs reduce significantly and that directly impacts the profitability of companies like DAM Capital. Here the important point to understand is that capital market companies have a higher fixed cost which is mainly in terms of their employee salary as employee is the biggest asset for capital market companies. So when the cost is more or less fixed and the revenue increases, profit margin increases. That's called operating leverage. And if revenue falls and cost is almost more or less fixed, then operating margin also falls. That's called operating deleverage. Let's understand it with an example. So let's say a company from capital market has a revenue of 600 rupee and its operating expense are rupees 400. Let's assume the operating expenses are more or less fixed. In that case, its operating profit would be 200 rupee and its operating margin would be your 33%. Next year, if the revenue increases to 800 rupee and if the operating expenses are fixed at 400 rupee, then operating profit would be rupees 400 and operating margin would jump to 50%. That's operating leverage. But what if third year, market condition is not good and its revenue falls to 500 rupee, but its operating expenses are fixed at around 400. Then operating profit would be 100 rupee and operating margin would fall to 20%. That's operating deleverage. Of course, the example we have taken is oversimplified to help you understand the concept of operating leverage and deleverage. DAM Capital also has a similar model where expenses are more or less fixed. So basically your variable expenses are on lower side. So if revenue increases, their expenses do not increase much and hence company's margin expand. And that's what happened in FY24 and that resulted in high growth in profit. But if the market situation is not good and revenue falls, company's margins would contract as expenses do not fall much. That's what happened in FY23. FY24 was certainly exceptional for the company and FY25 so far in H1 is also fantastic. But can this growth continue in entire FY25 and then in FY26? That's a big question mark because Indian markets are already trading at high valuation, especially the broader market. Large caps are still looking decent. So in case equity market underperform in the future, which is eventually going to happen as equity market is cyclical, in that case, DAM Capital would also see fall in profit and earning growth. Hence, short term is going to be very volatile. But as far as long term picture is concerned, India is one of the fastest growing economies of the world. We have the youngest population in the world and every year many people are joining the workforce. So due to this demographic dividend, there's still a long journey ahead for India over the next few decades. And when the economy would grow, stock market also reflect the growth. As you can see in the last 25 years, while there have been many cases where stock market fell down, but in the long run, it has created immense wealth for the investors. Apart from this, there are many other factors in favor of equity market. It includes growing awareness towards mutual funds and stock market, more white-collar jobs creating white income, lack of other investment avenues with decent return, and ease of investment with just few clicks. Considering all these factors, the merchant banking sector has a long runway for growth in the long term in India. Now let us look at the IPO details of DAM Capital. So DAM Capital IPO is between 19th to 23rd December, and the price band is between 269 to 283. Face value is rupees 2 per share. IPO size is 840 crore, which is complete OFS, that is offer for sale. Here you might ask, why OFS? That's because company is cash rich and it does not need capital for listing. Then you might ask why they're doing IPO. So management has mentioned a couple of reasons for the IPO. First is to attract talent, because listed companies can offer ESOPs, that is employee stock option plan, which employee can easily sell in secondary market if company is listed, and that helps in attracting talent. Second reason is to provide exit to the early investors. So that's a fair approach. Considering an upper price band of 283 rupee, company would command a market cap of 2000 crore. At this level, based on FY24 earning, company would command a PE of 28. And based on annualized FY25 earning, PE would be 22.8. Now this PE certainly looks reasonable, but remember that capital market companies won't command a very high valuation because of their cyclical business. One way to look at DAM Capital valuation is via peer comparison. Some peers of DAM Capital include your ICICI Security that command a PE of 13, then IIFL Capital that command a PE of 15, JM Financials that command a PE of 21, and your Motilal Oswal Financial Service with a PE of 17. If we compare the earning growth, in last 2 years between FY22 to 24, DAM Capital profits have jumped by 227%. ICICI earning growth is 22%, IIFL Capital is 62%, and JM Financial earning we can't see because there are exception losses. Motilal Oswal has grown at 86%. So DAM Capital growth has been highest, and considering the past earning growth, I think the valuations looks decent. That's one of the reasons why it has received stellar response from anchor investors that include all top FIs and DIs. Plus this IPO is also generating good buzz with high grey market premium. Now before we conclude on what to do with this IPO, let's have a look at the final part, that is key risk. So first risk in the business is business cyclicity risk that we have already discussed. This capital market sector where DAM Capital operate depends upon market movement. So good times in stock market and companies make good money, but during difficult times, the profitability would fall, which is a big risk. Second risk is competition risk. There are already many established players in this domain. That creates pressure on fee structure as well. So this competition risk would always exist. Third risk is regulatory and compliance risk. Capital market is highly regulated sector where SEBI and government keeps a good control in terms of giving licenses, permits and so on. So DAM Capital has to ensure it always comply with those regulations. Any non-compliance can impact its business. And fourth risk is attrition risk. Employees are the biggest asset for DAM Capital. Since it's a highly competitive space, employee attrition can be a key risk for the business. So in this video, we discussed the fundamentals of DAM Capital, whose IPO is currently open between 19 to 23rd December. At upper price band, company would command a market cap of around 2000 crore and available at FY25 annualized PE of 22.8. Company has shown exceptional growth in the past due to extraordinary growth of Indian stock market. Although capital market is a highly cyclical sector, and that is one key risk with the business. But overall, the long-term picture of Indian economy is very bright and DAM Capital is looking promising for the long term. Hence, you can consider applying for the IPO as the valuations are reasonable. Now tell me in the comments, are you going to apply for this IPO or not? Also, out of 8 recent IPOs, which one do you think is the most promising one? Let me know in the comments. I'll see you in the next video. Till then, take care.